Hey everybody, welcome back to the channel. I hope you had a great May. Well, the stock market wasn't that great though. Before we go into the update for the month, I just want to say, if you really like the content you see here and you want to see more of the content and more of the updates, I would really appreciate if you could like and subscribe. Okay, with that said, let's get into the meat of the update. So the real money portfolio was up about 14.5% year to date. May was a bad month. It lost about 8% in May. In general, I think the market took a breather. It had reached almost record highs at the end of April. The S&P 500 is down about, I think, 7-8%, maybe 6-7%. And the Nasdaq is almost in correction territory. It's almost down 9%. Let's look at the history of the account for the last month. So, I've started seeing some opportunities to buy again actually. So I recently added some money, 1,005 here. I bought some Alibaba 2,000 worth of Alibaba stock. Added another 1,000, and in fact I added another 1,005 on 1st June. It's not reflected here yet. So I wanted to also look at some of the worst performers of the month, and you can see some of the performance of the stocks on this graph. Straight off, you see Alibaba has almost crashed. It crashed almost 20%, and you can also see a lot of other stocks have gone down between 7 to 9%. Amazon included. You see Facebook, Google, even Boeing, and so on. Uh, I mean, two stocks that have not actually done badly are actually Visa and Master. In fact, Master has gone up 1% in May, and I think that's quite incredible. So they're very strong. My general approach is, the lower they get, the more I'm interested in buying them. For the long term, so I'm definitely not bailing out on any of these stocks. In particular, I'm looking for a chance to buy Master. I haven't had that opportunity yet. I was hoping in the last month it would go down a bit, but it went up even more. But I do hope to get more money into MasterCard. So let's get on to the monthly comparison. So I changed it a bit this month. I dropped Berkshire Hathaway and Markel. I think they have been underperforming for the year, so I thought it's not really relevant at this stage. And if they do start performing, up to the mark again, then I will add them back into the monthly comparison. I added another ETF called IGM, and I'll get into the details of why I added this. But you can see here, these are the performances of some of the ETFs and funds I follow. There's another fund I added. It's called the Berkshire Focus Fund. It's this one over here. And you can see why I've added it. Actually, its performance has been incredible, almost 26% year to date. So the real money portfolio has outperformed the S&P 500 and the Nasdaq so far. It's a bit below the technology ETFs and significantly below Berkshire Focus, but it's still very early days. It's just been 5 months, right? And so you really tell the performance of each after about 5 years rather than 5 months, and we'll see how it goes as time passes on. So let's just look at Fundsmate also before we get into the other details. Fundsmate has been coming back. It's done about 20% year to date, and that's pretty impressive. It's for the first time this year is beating the real money portfolio, and is also beating the technology ETFs. So the reason why I added IGM was that I found that VGT actually excluded some stocks. I think because of the categorization of technology stocks. So as you can see here, it doesn't have Amazon, it doesn't have Facebook, it doesn't have Google, and these are some glaring omissions, I think. I do like it still because it's very widely diversified. There's about 300 over stocks, and it represents a good cross section of the technological stocks. So I'm still going to keep it in a monthly comparison. But I decided to add IGM. You can see here it has also brought exposure to the technology sector. And beyond that, it also has exposure to the communication services and consumer discretionary sectors as far as they're related to tech. I think that's why it's called the expanded tech sector. And so it's hardware, software, internet marketing, and so on. So I wanted a bit more broader exposure in terms of technology ETFs, and that's why I've chosen to add this into the monthly comparison. You can see this one does have Amazon, it does have Facebook, Alphabet. I think I even saw Netflix further down the list. So I think this one would be a better representation of a diversified technology ETF. And the returns are no less than VGT. In fact, they may be even better. Over a 10-year period, it has done about 20% per annum. Quite amazing results. So the reason why I compare, the real money portfolio against these ETFs is because I want a strong comparison benchmark for buying more stocks for the real money portfolio. If I feel that the stock that I'm going to buy cannot do 15% per annum or more over the next 5 years, then I should just buy the ETF actually, I think, because I think the VGT ETF or the IGM ETF or combination of both, including the Nasdaq ETF, will probably do between 10 to 15% per annum over the next 5 years. So that is the bar basically for any stock that I hold or will buy, and it should do more than 15% per annum. Let's look a little into the new fund that I've added. It's called Berkshire Focus, and I think the reason is clear why I've added this in. I mean, over 10 years it's done over 24%. That's quite an amazing performance. I'm still reading up more about Berkshire Focus and its strategy, and I don't want it to be something that's one-off. I don't want it to be a one-horse trick or something that's overly leveraged or has some other very risky strategy. But so far from what I read, it doesn't seem to be like that. I'm also quite happy with some of the holdings I see in this fund. I mean, they're familiar faces. Some are not. But I mean, in all, I think it seems to be a good diversified bunch of high quality stocks. I think the reason why this fund is performing so well this year is probably because of its Qualcomm bet, and Qualcomm did very well after its settlement with Apple. So that's probably one reason why it's done so well this year so far. So that's it. That's the June update for the real money portfolio. I'm definitely seeing some more bargains I intend to buy, I hope. I mean, I don't want to sound like a killjoy, but I do see, more opportunities as the market goes down. And so at least in the short term, I hope the market does go down a little more. So I do buy more stocks. Well, that's it for the update for June. Have a great month.